Introduction problem statement. Oil has always been an important commodity in the modern economy, and oil supply shock will result in severe inflation, an energy crisis, or even a fracture of the global supply chain. Research scope and methodology studying the correlation between the petroleum market and the international market on oil price fluctuation. Quantitative analysis of the data from 2020 to 2022. What is oil? Naturally occurring petroleum product composed of hydrocarbon deposits and other organic material, a type of fossil fuel, and this is a non-renewable resource. We mainly discuss the connection between the major oil supplier, OPEC, OPEC Plus, Russia, and the United States. Our aim analyze quantitatively oil price and the effect on the petroleum market from 2020 to 2022, and we do not include any prediction from our own but from experts in the field. Objective: the study suggests a few essential conclusions about the influence of oil prices on the petroleum market in Vietnam. The research objective is to illustrate the price of crude oil in a specific method as well as investigate its effects on the Vietnam petroleum market. Specifically, the paper provides clear and vetted data from the oil industry and gives some analytical observations. Theoretical basis: demand quantity demanded is the number of goods that buyers are willing and able to buy. The law of demand supposes that other things are equal, the quantity demanded of goods falls when the price of goods rises. Factors affecting demand: income, number of buyers, expectation, price of related goods, and taste. Supply quantity supplies the amount of goods that sellers are willing and able to sell. The law of supply supports all the things are equal. The quantity of supply of goods rises when the price of goods rises. Factors affecting supply: the input price, the number of sellers, expectation, and technology. Elasticity: elasticity is the measure of responsiveness of the quantity demanded or quantity supplied to a change in one of its determinants. Elasticity and total revenues are correlated. Demand is elastic if price increase, total revenue decrease. Demand is elastic if price increase, total revenue increase. Analysis of Vietnam petroleum market supply. Quantitative analysis: Vietnam imported 11.6 million tons in 2010, but only 7 million tons in 2021 due to operation of new refineries. However, COVID-19 pandemic and Russian invasion of Ukraine both disrupted the world oil supply market. Moreover, the recoveries of the economy also increased demand and pushed the price of oil up. Suppliers of oil. In 2022, the main source of oil supply in Vietnam is domestic, account for 70 to 75% of the supply. The rest is imported mostly from Singapore, Malaysia, Thailand, South Korea, and China. Demand. Oil has low rise elasticity of demand. That means quantitative demand for oil is not very responsive to price changes. However, within the last few years, several factors led to the fluctuation in oil demand. Quantitative analysis. The graph illustrates the oil consumption of Vietnam from 2010 to 2020. By looking at the data, we can deduce a few factors that affect the demand of crude oil. Factor affect demand. One of the factors is COVID-19 pandemic, caused the demand for transportation plunged dramatically. When the world reopened the border, the supply of oil cannot cope with the surge in demand. Therefore, price increased. International politics and world oil prices are also changing factors. Military conflict in Ukraine therefore fuel importer difficulty in accessing the global supply. In order to understand more about how international market affect Vietnam, we will conduct analysis on international market from recent year.
We start our analysis of the international petroleum market with the three suppliers of oil. OPEC, the Organization of Petroleum Exporting Countries, consists of 13 of the world's largest oil exporting countries. The United States is the world's largest producer of petroleum liquids. The United States contributed 20% of the global input in 2021. Taking approximately 11% of the worldwide production in 2021, Russia was one of the leading oil producers in the world. COVID-19 pandemic has caused the world oil production to plummet from 98 million barrels per day to roughly 91.3 million barrels per day in 2022. However, the global oil production is expected to grow slowly after 2022 due to the various factors. First, spending cuts and project delays in response to low oil prices in 2020 are currently constraining supply in many oil exporting countries and regions. Secondly, financial crisis triggered bankruptcies and production shut-ins, which caused major oil companies to conduct less oil projects, which shift the strategy to include plans for production transition to clean energy. Together with post-COVID demand, global oil supply will witness a major contract and expand more than during the pandemic period due to the surge of oil demand. Now we will analyze the crude oil supply in different period of time in 2022 until now. Beginning of 2022, the US, Saudi Arabia, and Russia are aiming for levels that are at or very close to yearly records. The goal for both Canada and Brazil is to reach their highest levels ever. In the second quarter, the prospect of large-scale disruptions in Russian production due to wide-ranging sanctions and decisions by the firms to scale down exports after Moscow's invasion of Ukraine was threatening to create an oil production shock. At the end of the second quarter, Russia shut down in multiple pipelines, drastically driving the world oil supply. At the beginning of the third quarter, oil demand has begun to suffer as a result of rising prices and a deteriorating economic climate, although robust power generation and recovery in China are partially offsetting these effects. In general, the future of the oil markets has rarely been less certain. Take a look at the demand. Oil demand is expected to be harmed by rising energy and commodity prices, along with financial and oil sanctions against Russia. Let's take a few looks at the graph of the world oil products demand. As you can see, the consumption project shows the greatest regional decline in the FSU, but there have been also significantly negative adjustments to demand in OECD Europe, OECD Americas, and China. Now, in the remaining 3 quarters of the year, crude oil and other petroleum products are likely to have the highest drops relative to our earlier forecast. During the first 2 months of 2022, Russia was one of the world's largest exporters of crude oil. In January and February, exports from Russia accounted for nearly 20% of total seaborne international exports.
Welcome to the uncertainty of the petroleum market due to current international events. On the supply side, decreased demand affects all big producers, especially with higher cost, resulting in those seeking significant sums of finance to new projects. The drop in fossil fuel rose by an opportunity to eliminate fossil fuel consumption subsidized without having a significant impact on consumers or inflation. The loss of a significant portion of Russia 5 million barrels per day exports have added to the rising pressure. Slow economic development in the short term creates scars that might have long-term consequences for industrial and commercial activity and hence for oil consumption. Following lockdowns, several governments have adopted stimulus initiatives to boost economic development. One of the major factors that NXPR were troubling with its financial situation is that the outbreak of COVID-19 pandemic in 2020 and Vietnamese refiners and oil distributors struggle with excess oil stockpile. The Southeast Asian nation cut back on oil production and imports throughout the year. These are private enterprises that find trouble importing gasoline and oil from small and medium supplier after Nissan refinery reduced capacity. And while domestic fuel prices will likely to remain high in the near term, the government has assured that the long-term gas supply remains intact. The Ukraine-Russian war affected oil supply chains. Oil prices skyrocketed. We call the short-term disruption. Demand and supply from COVID-19 recovery increased while refineries are testing to resume their operation. Oil is inelastic in rising market and cost and market instability. Alternatives become more affordable. Depending on Russian equipment, so exploration and drilling activities would be disrupted. The rise reducing stocks. The rise of oil still increased after the lockdown opened for economic activities. The government has instructions to ensure the supply and regulating the rise of petroleum products. The government also reduced 50% of the environmental tax on fuel. Tax and fees account for 42% of oil price in Vietnam, and the tax cut reduced revenue by 24,000 billion Vietnam dong. In the social security policy, the government also studies supportive policies for people affected by oil price changes, proposing social security policy to support people, especially poor household, and supporting solution for the business community. And finally, conclusion. On the supply side, short-term highs in oil price bring immediate benefit from oil producer. Post-COVID recovery had led to multiple relief from the strain of the current situation. Vietnam government tax and policies are contributing to the balance of the current market. On the demand side, COVID-19 has the oil industry restructured the market by to renewable energy since the lockdown prevented oil consumption from purchasing and therefore led to the decline in demand. Thank you.